What nobody tells first-time home buyers is that the mortgage process has a beginning, a middle, and an end, and every step is predictable. The buyers who struggle aren't the ones with bad credit or low down payments. They're the ones who didn't know what was coming. Let's change that. I'm Candy. I've been a mortgage loan officer for over 20 years, and I work with first-time home buyers every day. Today, I'm sharing a story about a client. We'll call her Maya. A nurse, early 30s. She had been saving for years and almost gave up right before the finish line. If this is the kind of content that actually helps you, please subscribe. I post every week, and this channel is designed to save you money and stress. Let's take this step by step. And the first step is pre approval. This is where we will pull your credit report, ask you about your job and your income, ask you about assets, and more importantly, ask you for documentation to back all of this up. This means we'll ask for pay stubs, W-2s, bank statements, IDs. We will ask you questions. If there's anything that is not completely clear by looking at the documents, we may ask you for an explanation and probably a letter. We want the underwriter who ultimately approves the loan to be able to get all of the answers with the documents that are in the file. So, for example, if you have a large deposit into your bank account, we're going to ask you for a paper trail of where that money came from. So, if you sold a car, for instance, we want a bill of sale, a transfer title, probably a letter explaining it. This way, when the underwriter reviews it, there are no questions about what happened. If we take care of this stuff at the beginning, we don't have to do it while you're also getting a home inspection, packing up to move. Now, this pre-approval is important not just to you, but also to the seller. It tells you what type of loan you're qualified for and how much you're qualified for, but also what you should be expecting to pay out of pocket during the process and at closing. It tells the seller what type of loan you're qualified for and how much you're qualified for, and that you really have talked to a lender and you really can buy this house. They want to see this letter so that they feel confident that you can get to closing. It's not uncommon for the seller's agent to call me and ask if I've seen your documents, if I've seen your credit, if it's strong enough, and if I am confident that you can buy. And by going through this process, I can assure them that you're ready for that without providing any confidential information. The next step is to go house shopping. And this is where your realtor will show you houses according to the specifications that you gave them. And once you find the right house, then you'll negotiate for your final purchase agreement. This will determine the price, when you'll close, what your down payment will be, how much, if anything, the seller will be paying towards your closing cost, your title policy, your survey, and your agent compensation. And once that's final, that's when the clock starts. While you're working on getting your home inspections and finding out how to transfer the utilities, shopping for homeowners insurance, we'll start the loan process, which will be so much easier since we did all of that work up front. We may have to update some of the expired documents like pay stubs and bank statements, but for the most part, we'll have everything that we need. At this point, there will be a set of disclosures for you to sign, including an estimate of your closing costs and out-of-pocket expenses. You want to review this carefully. Ask for an explanation for anything that you're unsure of at this point. Now we'll be working on property information. We'll order the appraisal, order the title policy, order the homeowner's insurance policy. There will still be a few things for you to do, like choosing an insurance company, but we have most of what we need. While we're waiting for those items, we'll be preparing your file and submitting it to the underwriter. This is where humans are reviewing everything that we've put together and make sure that we've met all of the requirements for the loan. This is why it's so important that we have a complete file with no questions, because each of those questions becomes a condition that we have to meet to get our final approval. Some of those conditions are things that we're already planning for, like the appraisal that we ordered, but there may be a few things that the underwriter still has questions about. So once we get our initial conditional approval back, you may get a call from us asking for an explanation or asking for some additional documentation. What takes time here is getting back the items that we've ordered and getting information back from you that we need at this point. Our goal is to get our initial underwriting approval, get those conditions back, and then get our final underwriting approval. That final underwriting approval is also called a clear to close, and those are the magic words that mean that we can schedule your closing. Before this can happen, you should be getting a closing disclosure, providing the most up-to-date closing cost and credits. Now, everyone does this a little differently, but we try to get it out as early in the process as possible while it's still just an estimate. And then closer to closing day, you'll get the final closing disclosure. It shouldn't vary very much from what you're expecting. You do have to have it at least 3 days before closing. And finally, closing day. This usually happens at the title company. You'll sign a stack of papers. This will include your loan documents and the deed transfer. We'll look over everything after you've signed it, make sure that we have everything that we need. We'll send the funds to the title company so that they can pay the seller. They'll record it with the county to make it official, and you'll get your keys. Now, there may be some variations on this, but those are the basics. Now, let me tell you about Maya. She's a nurse. She'd been renting for 8 years, saving the whole time, and finally got to the point where she was ready. Her pre approval went smoothly. She found a house that she loved. She made an offer, got it accepted. And then underwriting came back with a condition. The appraisal showed that the appraiser had some concerns about a section of the roof that had a tree overhanging it. So she called me convinced that the deal was dead. And I told her that this happens all the time. And this is exactly why we catch it in underwriting before closing. We asked the seller to trim back the tree, which they agreed to do, and Maya closed a week later. The day she got her keys, she sent me a photo of herself standing in her doorway of her own home. Underwriting isn't the enemy. It's the final check that protects everyone, including the buyer. If you're watching this, you're probably considering buying a home. So what should you be doing right now? If you are 6+ months out, pull your free credit report, start a savings habit, talk to a lender. If you're 90 days out, get pre-approved, lock in an agent, don't change jobs, don't open any new credit. If you're under contract, respond to your lender quickly. Don't make any financial changes. The mortgage process isn't complicated, it's just not familiar. And now you know what to expect. If you want a free home buyer guide, send the word guide to me in the comments below and I'll send that to you. It maps the whole thing out. And if you want to talk about your specific situation, DM me. I'm happy to help.